Hello and welcome to another update video about Bitcoin. Only here, quick one just before the daily candle close. By the way, I didn't actually talk about it, but last month actually closed, I wouldn't say bullish, but at least we had a green candle, but only just about. We talked about that previously, that historically February is actually quite a positive month for crypto. Well, at least it was negative this year, and we obviously still have a chance to get that March rally. I mean, typically you get February, March, April, May not so much, but until April at least, normally historically positive months for crypto. Now, of course, we don't have enough data points. We only have so many years, and at some point a pattern can break, but it's just what historically is has most often been the case. Yeah, really not too much to update from the previous video. Just want to highlight again this resistance area and want to talk about the targets again. So after we bottomed here on the weekend, Bitcoin really makes it difficult. I mean, this move up, looking at it objectively, it really looks corrective. It really does look corrective. Yeah, therefore we've got on this chart this ABC structure, A, B, C. Now in this C wave, it can still rally higher. The A to C target, which means wave A and wave C are actually the same length, is actually at 24,219, but it can of course push higher the C wave. We have reacted, and I showed you that in the previous video perfectly, to the 24K level, which is the first resistance level for a B wave, because if we say this move up off the weekend lows was a wave A and not a wave 1, this move down was a wave B and not a wave 2, and the move up here is a wave C. And again, we already did the minimum it needs to do, this wave C, then this would be a higher degree B wave. And therefore the arrow, which indicates if this really is a B wave, which it can be, then we will sell off further, and I see it come down maybe even to 21K or, roughly into that area. This would be the bearish count. We must not ignore it. And exactly for that reason, because this now is a complete B wave pattern, which doesn't mean it needs to play out. I mean, primarily I'm focused on higher as long as the support area holds, which I'm going to let you know in a minute. But we need to know that, if you know your environment in trading, you've won half the battle, because then you can, only then you can really decide, when do you sell, when do you take profits, do you take partial profits, do you take some risk off, do you want to jump in or not? And if you don't know your environment, how can you win, right? So this is exactly now the point why also this support area is highlighted in orange. Orange means it's higher risk of breaking. It's not to be understood as bearish. It's just that the risk increases here. Yesterday, the one that I had here, I did hide it now, was in yellow, less risk, because we had confluence that both in a C wave and in an impulsive bullish scenario, the trend was up. Now it can easily break, and Bitcoin doesn't really show. I mean, Ethereum showed at least a decent reaction to the support area, but also didn't make a new high. Bitcoin again weaker, and that's also why I highlighted in the last videos that it looks to me more likely that Ethereum bottomed and not Bitcoin if I had to make a choice between the two on the weekend. I mean, but yeah, this is now obviously, as long as it's holding now the micro support area here, 23,232, I would focus on higher to get more confidence that the bullish scenario is working out. First of all, I want to see it break above 24K in the very first step. Now, it tried that before. I mentioned yesterday the 24K area, but it didn't really do it substantially and sustain above it. Next step would be to take out 24.2K. There will be resistance at 24.3 as well, which is the golden ratio, and at 24.7. So we can really only say above the resistance here, which ends at 24.7, fib resistance, that this is not a C wave of B anymore. Okay, so this is something we need to be very much aware of. Now, in an ideal case, it now breaks out in a third wave of a third wave of a third wave. It should really do a rocket start now. So far, we don't see it. That's why I highlight the risk here again. But as long as we're holding 23,232, the focus is on higher. If we lose that area, we probably will retest the weekend low, which was here at 22,730, and going below that will increase massively the chances of going into the alternative scenario, which I'm not going to go through in this video. We did that really in all the other ones. So if you're new here, just hang around and wait for the next update, and I'm sure I'm going to talk about it again tomorrow. But yeah, until then, hope you had a great day. A bit of a boring day today. Maybe the remainder of the week will be more interesting. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership, and also make sure you follow us on Instagram and Twitter. You can find the links for those in the video description. There's additional content and some signals. Thank you very much. Bye-bye.